Today we are going to see an important concept, that is understanding the statement of financial transaction, SFT. What is this SFT? Usually you go to bank and you make some transactions. A transaction may differ based on the value, that is maybe from 1 rupee, 100, 200, 1000, 10,000 lakhs, 10 lakhs, crores, millions, 10 millions. It will go on. But what thing, the income tax has a certain limit to know what is the transaction that is happening. If such transaction has crossed some limit, threshold limit, these banks will report to income tax department about such significant transaction, and the statement of financial transaction will be viewed by the income tax, and they will ask the question why such transaction happened. Is this part, is it in a part and parcel of the company or any other new transaction? Such questions may be asked by the income tax. So we are going to see how to know how they collect the data, and this understanding statement of financial transactions given by the income tax department. We will break in points, we will discuss every paragraph and know what is it. It will take some time, but you're going to see what's the basic provisions, person required to file statement, and transaction record to be reported, and reporting transaction purpose of pre-filing return income, at the same time inaccurate deficiency in statement, reporting things. These are the major things are there. So main thing, first you want to, everyone on coming, they want to know what are the transactions that are going to be reported by the entity to the bank. These points we will first discuss, then we come up with the next thing. The statement of financial transaction shall be furnished by every person mentioned in the column 3. What does they mention in the column 3? Of the table below the respective of all the transaction of the nature of value in the corresponding entry of column 2 and the state table. So we will see who will be reporting. First we will see what are the transaction. Nature of value of transaction, class of person reporting. Who is going to report? Bank and the cooperative society will report. So what they will report? Making payment made in cash. So made in cash for the purchase of bank drafts or pay orders or banker's check of an amount aggregate to 10 lakhs or more in a financial year. So payment is made for what? Purchasing a bank draft, a DD, demand draft. It's a bank draft. A pay order, going to pay someone. So this pay order, that is due making, or a bank check for aggregate amount. So I going to pay someone rupees 10 lakhs. So any transaction that is amount aggregate 10 lakhs or more in a financial year. It doesn't say to a single person, it says a payment is made in cash. If you making something in cash, so when will may be cash? I withdrawing 10 lakhs rupees. Is it cash transaction? Yes. How will they account in the books? So cash is being withdrawn. How you make? First you want to understand that what you make. You make something, so you withdrawing cash. So cash will be reduced. Cash will be increased in your books account, and bank account cash will be reduced. Right. Second thing. So it's only cash. So you depositing 10 lakhs also, it will be considered aggregate of 10 lakhs made in cash, and withdrawing 10 lakhs also they will see. Second, payment made in cash aggregate to 10 lakhs or more during a financial year for a purpose of prepaid instruments issued by the RBI. So RBI is issuing some instruments, for that you bought through cash, and if the instrument is bought through cash also, they will count it out. Super. Next, cash deposit or cash withdrawal including bearer's check aggregating to 50 lakhs or more in a financial year in form of one or more current account person. So you may have one or more current account, you deposit cash or withdraw cash, the aggregate amount is crossing 50 lakhs or more in a financial year. So first 3 you should see. So they may ask the question, sir, do I need to worry? So when will income tax will look upon me? Three conditions. What are the three conditions? First, purchase of bank draft. First point. Okay. Pay order or banker check. If that aggregatedly you add all the bank draft, you add all the pay order, you add all the bank check which is made in cash, payment made in cash. If this or not single, if cumulatively if this cross 10 lakhs, they will report, bank will report income tax. Second, payment made in cash. Okay, how much? 10 lakhs or more during a financial year. Super. For what? Purchase of prepaid instruments issued by the Reserve Bank of India. So if you buy some prepaid instruments, then bank will report. What is the third thing? Cash deposit. What they cash deposit only? No, not only cash deposit, cash withdrawal also. Amounting to what? Aggregate of 50 lakhs or more in a financial year. If you make cash deposit, cash withdrawal, aggregate of 50 lakhs, they will in one or more current account. Not they didn't mention savings account, they said one or more current account. So is savings account deemed to be received? Yes. You may have a question of about the difference of the purchase of bank draft and pay orders. A simple thing, bank draft can be transferred from one person to another person. It's an internationally used bank DD, bank and draft is used internationally, but pay orders are usually in the local businesses. Example, you go to a bank, you fill up application, mention whom you going to pay this money and fill up the amount and get a bank draft and go to that person and give that draft. He may go to any bank or the specific bank or specific bank branches and collect that money. Second thing, pay orders. Pay orders are usually local. Rather, the bank draft once I given, it can be transferred to another person, but the pay order, it will be specifically named this payment is going to this person. So only that person who has the pay order come and collect that cash. So what happens is the banker, you don't even have required a bank account to have a purchase a pay order. You just go to a bank, make a payment application, give your identity card, identity bank card, and just you fill all the thing, you give the money, they will collect some charges and they will give you one copy that this bank owes this person this much. They can come and collect this many days. That's it. They can use that, go to bank, they can fill it, they can take it and go it. That's it. Done. Khatam ho gaya. So that is the thing. It's actually cash which is in the bank, which is not accounted in his account number. So that the banking asks any aggregate in any PAN card, aggregate of 10 lakhs or more such payment is made. Banker's check, that is clear. What happens? Some person may use his banker's check. When you give a check, they will cross it. Okay, double cross it. If they not cross the check, what you can do? You can go directly to that bank. I have a check. Okay, this number. Okay. Then what I can do? They can get the amount without depositing into the account. They can get the amount from the bank. So 10 lakhs and more. So what the person who going to give the money, banker will ask, please provide your PAN card number. So that only we will provide you. So such kind of data is collected and such data will be provided. If a person is providing, because sometimes the banker can't ask the identification number if the amount is insignificant, maybe a 10,000 rupees amount may be given. So in that time he can't ask the customer to provide PAN card number, Aadhaar number. So what they will do, they look after the account where from such payment is generated. Okay, that is the thing in the first point. So banker's responsibility. Second, cash deposit aggregating to 10 lakhs. So cash deposit aggregate to 10 lakhs in one or more financial year. In more 1 lakhs or more in a financial year. In a financial year, more than 10 lakhs. In one or more accounts other than current accounts and time deposit of the person. So they is clearly saying that cash deposits made into account, if they made in the current account, they are not going to worry, because in the previous point they had said the cash deposit or withdrawals aggregate to 50 lakhs, up to that we don't worry in one or more current account. But such cash deposit is made in the what account? Current account, we will care about it. So whom this applies? For banking company, cooperative bank, and postmaster general. So these accounts are responsible for that. Third point, one or more time deposit other than a time deposit made through renewal of another time deposit, okay, of a person aggregate to 10 lakhs or more in a financial year. This is very good thing. What happens? Some people have a lot of money, they don't know how to invest in shares, or they don't want any risk, they want a zero risk. What is their way? They can make a time deposit in a bank, they can make a deposit, FD, fixed deposit. What is the problem is, when you make a deposit, you may not depositing for undefinite period, you're going to deposit for 1 year, maybe 6 months, 90 days, 45 days, 7 days, 180 days, 360 days, 270 days, 540 days, many schemes. So in this one of the time deposit, one of the time period, they are going to deposit, okay. What happens is, at the end of the time period, the person may get the money back, or he would say, I need to redeposit that money. So what happens if a person has 10 lakhs rupees and he is depositing in 30 days bond? What happened is, in 30 days, how much we have? 12 month cycle. So 12 cycle will come out. So in the period of 12 cycle, the same 1 lakh rupees will be done, it will go on 10 lakhs. So the aggregate amount will be gone to 10 lakhs. Whether the banking company, cooperative, postal master general, Nidhi company, non-NBFCs required to report this? No, they are giving, you don't need to deposit such amount, you need to only report what are the new deposits made. You don't need to mention what are the renewal. If such one or more time deposits made, you need to report that. Such thing is given to banking and cooperative society. Super. Fourth point, payment made by a person of amount aggregating to 1 lakh or more in cash, or 10 lakh or more by any other mode, against bill raised in respect of one or more credit card issued to that person in a financial year. So for whom it's suiting is banking company or cooperative company, any other company or institute issuing credit cards. So let's come to the new bracket. So who are this person who having credit card? So what is that credit card do? So if a credit card holders makes payment to any person, 1 lakh or more in cash, okay. So he is using credit card to issue cash of 1 lakh or more, okay. Second, 10 lakhs or more by any mode. So in a year, if you use your credit card to buy 10 lakhs or more through any mode, so e-payment, checks, anything you buy more than 10 lakhs, that will be reported by the credit card company. If you make cash payment 1 lakh or more, that will also be reported by the credit card users. So 2 point, this is for the companies, institution issuing bonds and debentures. Want to understand what are these bonds and debentures? These are usually loan which is got by the company from individuals, as persons, people. They get the money from that and they will pay interest in systematic basis, like monthly, quarterly, half-yearly, yearly, and they will pay some interest. That is the thing. So what they need to report is they received from any person. So they are going to receive money. How much? Aggregating to 10 lakhs or more in a financial year. If you are issuing bonds or security to any person which is total in a year cross 10 lakhs, you need to report it. So issued by the company or institution, and the same previous condition, renewal don't come. So if this purchase of bond or debentures or an account of renewal of bond or debenture issued by the company, you don't need to report it. But other than it, you need to report it. Good, good, good. So point 6, receive from any person. First thing, who it's going to apply to? Company issuing shares. So the company is going for IPO, initial public offer. This company is going to issue shares to its shareholders, first time investors. So what they need to report? Receive from any person. You have received any amount from any person if the total aggregate amount 10 lakhs or more in a financial year. So a company has a policy. What they do? They have paid up capital. So the paid up capital, what? That is share capital they do. The share capital has 2-3 forms: share application money, then face value of share, then premium. So what I need to report? Because if I buy something, I going to buy face value plus premium, security premium. This both are going to go. Before that, there is a one thing is share application money. Do I need to book that also? Yes, you need to share the information. A total amount arising more than 10 lakhs rupees also. So why this including share application money came is, first point, a receipt of any person aggregating 10 lakhs rupees only you need to report, right? What actually happened is, these companies, previously there was a policy. It's not, you don't need to get that full value of that shares in a single slot. You can have a call money, so 2-3 call money, final call money you can have. You can issue the share, you can allot the share, only after got the final call money. So you will get a part 25%, second 30% or 40%, then you final amount you will get. What happens? These companies, they started the company. After that, they got the share capital money from different person, okay, and they got the 2 payment, first call and second call, and these money are black money, okay. That money came to the company. The final call will never be paid. The final call will be paid only by the intended user. So what else, after this allotted shares for this shareholder will be relisted, re-requested for the money, and new shareholder will be appointed, and that shareholder, the intent shareholder, will come and point, but the amount what they receive will directly taken into company's pocket. They made some systematic idea previously with the share market. This is some example. We can discuss it later. So the mostly what I said is in that amount only, because other things are companies, you don't need to worry a lot. The person, any person who is liable to tax audit under 44AV, who are liable for tax audit? Any person, okay, any person who has property, who has income, what, crossing 1 crore. So service providing 50 lakhs. If they cross it, they got tax audit. So receipt of cash payment exceed 2 lakhs for a sale by any person, goods or service of any nature other than specified under number 1 to number 10. So the purchase and sale of immovable property, that's second thing. Before saying that, we go into this property. Inspector General, Register, Sub-Register appointed under Registration Act 1908. They will report. What they will report? Purchase or sale by any person of immovable property amounting to 10 lakhs. If you buy or sell a property, who is buying, what is the PAN card, what is the Aadhaar card, what is the amount paid by whom, how the amount is paid, such detail will be available with Income Tax Department. That data will be shared by Inspector General, Register, Sub-Register Department under Registration Act 1908. That amount 10 lakhs or more, or value of the Stamp Valuation Authority referred to section 50C of the Act at 30 lakhs or more. So if these conditions happen, they will report irrespective of your value. Even though you bought the land in 10 lakhs, but the actual valuation of land is out of section 50C, we will see section 56 part of time, is cost 100 lakhs or more, they will report directly. They don't worry who are you, who want to do, that's it. Second, ninth point is also an important point. Receipt from any person for a sale of foreign currency, including any credit by such currency to foreign exchange card or expense in such currency through debit or credit card or through issue of traveler's check or draft or any other instrument of the amount aggregating to 10 lakhs or more during the financial year. So the authorized person under FEMA Act, Foreign Exchange Management Act 1999, will report who and all receiving money on sale of foreign currency, dollars, euros, Singapore dollars, Malaysian dollars. These dollars, if you are selling and getting the amount through what? Through currency, you are directly going using currency. Or no, you have a foreign exchange card. Through that card, you are exchanging. Or no, you are making expenses in the currency. Through debit and credit card, you having 10 lakhs rupees in Indian INR, and using that INR, you are going to USA and making some transaction which is 10 lakhs or more in the financial year, that will be reported to Foreign Exchange Management Act. Okay. So point 8, for whom a trustee of mutual fund or such other person managing the affair of mutual funds, receive from any person amount aggregating to 10 lakhs or more in a financial year for acquiring units of one or more schemes in mutual funds, other than the received amount of transfer from one scheme to another scheme mutual fund. So you are having money, you are interested to deposit in mutual funds. What are you having? You have a salary of monthly 3 lakhs. You interested to save 1 lakh every month. What happens? Every month you are applying 1 lakh, 1 lakh, 1 lakh, 1 lakh in a mutual fund. The mutual fund agency will check through your transaction and see through this person has deposited 10 lakhs rupees and bought some schemes. That amount and what that instrument they received, everything will be reported by the mutual fund to income tax department. Paka. Buyback of shares from any person for amount or value aggregating to 10 lakhs or more in a financial year. What happens? This buyback is a very good concept. The company will issue shares to its shareholders. After some point of time, they may think they can't able to make some decision, or they think the value can be increased if you reduce the shareholder and we have surplus of money. What they will think is, if they don't have a proper investment plan, they use this money to buy back the shares which they issued in previously. So the company can, because you have 10,000 shareholders, if you buy off 1,000 shareholders, it's very good, na? Right? Very good. So that you have a control of 9,000 shareholders, so their earning also will be increased. If it is listed company and that company share value also increase because you get more return than the previous. And second thing, they have a good control, they have a good environment, and the same thing they offer the burden, the shareholders who want to buy the shares, want to give up the shares also, they can give. It's a good opportunity because the buyback doesn't happen small prices, have a good premium. So it's a very good point. So these are the 10, 11 points we have seen. We will see in the other points in the next thing. So bye.